If everybody that's listening to this does that, they will maintain and grow their wealth. But it's people bet, they make big bets. They think they're so damn right. They put half their net worth into one sector or one stock and they get wiped out. If you believe in Bitcoin, you think it's a digital gold and you live through the volatility. I believe in both. I believe that crypto will be the 12th sector of the S&P in some period of time because it provides productivity to all 11 other sectors. Wealth creation comes down to one word: discipline. That's it. The ability to look at something and say, I'm not going to buy that. I'm going to keep that money working for me. Not many people have that discipline. Wealthy people have that discipline. You meet them later in life, you realize when they were young and had nothing, even the ones that were employees their whole lives that are now financially free, had the discipline to say no.
Kevin O'Leary lays out his current outlook and audacious expectations for cryptocurrency and Bitcoin in the next weeks as the market prepares for the next significant Bitcoin bull run. Kevin thinks a significant change is on the horizon as momentum continues to grow and large institutions covertly set up shop behind the scenes. He emphasizes the importance of this next stage of the cryptocurrency cycle and discloses that he is already making large fresh wagers in his personal portfolio. Kevin believes he is still fully bullish on digital assets, especially after double-in during the recent bear market, with another bull market quickly approaching and technology and cryptocurrency predicted to dominate as major investment topics this year. Kevin maintains his optimism by predicting rapid development in the future and advising investors to take advantage of market troughs. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Products. I also own crypto now, and I own alternative assets like gold and watches. My watch collection's actually done quite well, even though there's been a correction. There's volatility, but I have some watches that I bought for $200,000 are worth over $1 million today.
Crypto. So are you still bullish on crypto as an investment?
Yeah, I am actually, but people get crypto confused with its real potential. If you believe in Bitcoin, you think it's a digital gold and you live through the volatility. I believe in both. I believe that crypto will be the 12th sector of the S&P in some period of time because it provides productivity to all 11 other sectors. So the way I own it is I own the exchanges. My exchange in one called WonderFi up in Canada just got acquired last week or 2 weeks ago by Robinhood. I'm happy because I think Vlad, who runs Robinhood's great. And now he's got 1 million plus accounts in Canada, a market that he'd never participated in. But the point is, this is never going away. It's going to stay forever. So how do you participate? You can buy some Bitcoin, just like you can buy gold, buy it in an ETF or actually own it yourself. You can buy the exchanges. You can use, you can buy Circle stock now, it's public. Circle makes USDC. You can buy USDC in an account and make 4.1% interest on it right now. So there's a lot of ways to participate, but yes, I'm here to stay. But I've grown up. I was around during the period where the crypto cowboys lived, and I survived that all. And I even testified in front of the Senate and the House and whatever else the testimonies were during the tumultuous period. Let's talk about digital payment systems, because what's about to pass first, we're days away from this happening, is the Genius Act, which is actually the Stablecoin Act. It was just passed by the Senate 48 hours ago. It's going back to the House. I actually worked on that bill 2 years ago.
Your portfolio in terms of Bitcoin allocation or crypto allocation, what is it now?
It's at about all in. We marked to market last month. It was 19.1%.
19.1%.
Yeah, I have to keep it under 20. It's a sector. So, but remember, in that is the cryptos itself, the Bitcoin, the USDC, and the shares of the infrastructure companies like Circle and everything else. I've got, it was a very successful IPO, and I'm very happy with that portfolio. But if everybody that's listening to this does that, they will maintain and grow their wealth. But it's people bet, they make big bets. They think they're so damn right. They put half their net worth into one sector or one stock and they get wiped out. That's what happens.
So would your mother pick the stocks herself, or would she invest in an index fund? Or
she indexed.
She used it. So okay.
You can, even back then, they didn't have ETFs, but they had mutual funds that said the only stock in this mutual fund it doesn't have any debt and it pays dividends. Whatever. They were very rudimentary back then. They were just collections of stocks. I think she had like 28 names or something like that in the portfolio. But if you looked at them, they were really boring large cap names. But they were sectorally diverse. There wasn't 10 sectors back then. There wasn't 11. There was 10. So they didn't have real estate as a sector. But I looked at it saying, wow, these are really boring.
You learned a lot about money from your early upbringing, right? From your that early context.
Yeah, because what she said to me was, look, you know, I even do this today with wealthy people call me up all the time and say, look, you know, they get divorced. This very wealthy woman got divorced recently, and she said, look, I'm divorcing, and she was a billionaire. She was divorcing. She was more multi-billionaire. And so she said, look, I'm getting everybody's calling me up to be my advisor because I'm separating from my husband. It's all his guys that did all the management of our family wealth. Would you be my advisor? I said, no, I don't do that. But, you know, I can just give you some basic advice, and you can hire people to stick on the mandate. And I gave her Georgette's strategy, but I had her do something else too. I said, let's get a piece of paper. You're a billionaire. Let's put everything on this piece of paper on the last 90 days that you've spent on, whatever the hell it is, I don't care. And let's put on, no computer, no spreadsheet, on this, let's look at all the income that you've made off your portfolio as it stands now, whether it's gold you have or land or stocks or bonds. Let's just do a gut check. Do you outspend yourself? She said, why would I give a shit? I said, wouldn't you like to know how much money you're burning, living your lifestyle the way you live it? Just out of interest. Maybe you have enough for the rest of your life, but maybe you want to give some of it to your family one day or give it to charity. Wouldn't you like to know? Because one of my rules is never outspend yourself on any 30 or 60-day cycle, ever. Just ever. I don't have any debt. So I'm very careful about that. And we went through this little thing. She freaked out. She was pissing away money, just bleeding hundreds of thousands of dollars a week. I mean, I don't care how rich you are. You don't want to be stupid. Like you've had nobody restrict what you do with your money, because you're going to have to sell stocks at some point or sell gold or sell land to keep this up. And are you really that happy? My point is, most people don't do that exercise. I don't care if you're only making $56,000 a year or $68,000, the average salary.
According to Kevin, cryptocurrency is expanding more quickly than any other investable asset in recorded history. He estimates that there will be over 1 billion active cryptocurrency wallets globally by the end of 2025. He thinks that this increase, which is nearly difficult to completely understand, will result in the fastest wealth accumulation in history. Following years of investigation, Kevin comes to the conclusion that all statistics and charts indicate the same thing. Markets are driven by liquidity, and cryptocurrency will perform better than any other asset class. He's been telling investors for months that everything is beginning to come together now, paving the way for a time when cryptocurrency values might increase significantly and quickly. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
But you want some diversification into starting to build up that investment account for when you retire, so that you have something to live off. If you only put aside 15%, if you're making $70,000 a year and you put 15% aside from when you're 25, you'll have over $1.5 million if you just invested it in the stock index, in the S&P 500. That's what history has told you.
In what time frame?
Your whole career. I mean, you're going to be 65. You're 25, 65. You just stick with that protocol, and you'll watch it grow. You'll watch it grow. You go up and down as the market goes up and down. Some years it'll go flat, whatever. But it's the people that don't even think ahead and find themselves at 45 mired in debt, including a mortgage. You want to get rid of your mortgage in your 40s.
Most people's primary investment asset is the house they buy. Is that
yes,
smart?
it is, but it's also the debt they own. It's a primary asset. How much debt does it have on it? It's only the equity value is the asset. So if you're buying a house that's too big and you've only put down 10% and it's 90% mortgage, what do you really own? You really own the 10% at whatever price it is. Sometimes housing goes flat for a while. It's okay, but it's not okay if it's too much house.
If you're a 25-year-old and you're on that 70K that you talked about, and your objective was to make money, you don't have kids, you're not in a relationship, would you buy a house?
No, I wouldn't, because why do I need a house unless I'm renting as an income property? I'm buying a house because I'm getting married, I'm going to raise a family. I need a house. I mean,
is that the use case for buying a house, you think?
I think it is. People, but it's not. There are many people that say, I love real estate, I'm going to buy 3 houses, I'm going to rent them out. That's a different business. And I know people in their 20s that do that. In fact, they're successful. That's all they do. And so that their job is to find houses, buy them, fix them up, and rent them. And they manage that geographically tight portfolio. It happens a lot in student housing, for example. I've got a good friend who's involved in student housing. He's very successful. He just focuses on one aspect, buildings that rent to students, and he manages it. And he raises a family, he's successful, but that's one thing he does. That's not the same as saying, I'm going to buy a house because I just got married and I'm going to have a child in the next 24 months. then you should have a house. But if you said to me, I'm single, I want to make money, I wouldn't buy a house. That's not the number one asset class, I think. I'd get a diversified portfolio and just ride the pony with that for a while until I meet that special person I'm going to, raise a family with. And then I have a little nest egg I can work with. I mean, wealth creation comes down to one word: discipline. The ability to look at something and say, I'm not going to buy that. I'm going to keep that money working for me. Not many people have that discipline. Wealthy people have that discipline. You meet them later in life, you realize when they were young and had nothing, even the ones that were employees their whole lives that are now financially free, had the discipline to say no. There's so much stuff you don't need.
According to Kevin, building wealth is easy if you get started early. For instance, if you start saving 15% of your $70,000 annual income at age 25 and invest it in an S&P 500 index fund, you will have over $1 million by the time you are 65. History demonstrates that this approach is effective due to the long-term compounding effect. Being consistent and sticking with your investments through market ups and downs is crucial. Kevin cautions that a lot of individuals don't plan ahead. They have a mortgage and other debt by the time they are in their 40s or 50s. According to him, the majority of individuals think that their home is their greatest asset, but that is only partially accurate. Only the amount of equity you truly own makes a property an asset. You only really own 10% of a home if you put 10% down and have a 90% mortgage. Prices for homes don't always rise quickly. Occasionally, they stay the same for years, and if you purchase too many homes, they may end up becoming a burden rather than an investment. Kevin concludes by outlining his personal approach to investing. Because they offer both growth and consistent income, he prefers dividend-paying stocks. He owns cryptocurrency, fixed income products, and alternative assets like gold and high-end timepieces. His $200,000 watches, for instance, are now valued at over $1 million. Diversifying into various asset classes has allowed him to grow and safeguard his wealth over time, even in the face of market volatility. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.